We're going to bring in some of our commodity experts. We have Markus Helsing, who's joining us live from our Melbourne studio. I believe we also have David Lennox, who's on the line in our Sydney CBD studio. A very warm welcome to both of you. Thank you so much for joining us on the program. Now, Markus, I might just start off with you. A thought on those oil prices. Obviously, OPEC production cuts have come into effect. What are you expecting to see in the oil price as we head into the new year?
Happy New Year, by the way, Leanne. It's great to be back on board. Thank you. Now, look, I really think, as we said many times the last few months, what OPEC did, they built the floor under the oil price to start with, right? If things are going to race away or not, I mean, it depends on many issues. Obviously, the supply and demand scenario has to eat away, and that's a matter of time. We still think the technical outlook for oil is looking encouraging. All the key oil stocks that you look at, in particular Australian ones, actually really lagging behind international ones. So I think there's just, to us, a lot of potential in them. The likes of Santos on a geared basis and Woodside have been mentioned many times, to me are just a great hold. We like the look of them. We think they've got a limited downside risk, very much so, with the underlying oil price outlook. So we basically think oil probably will see a $50, $60 range probably the next 2 months. There is always a chance for some squeezes here or there, but that's basically the outlook we have in a moment, carefully bullish.
All right, what about you, David? I mean, global oil prices have been moving off the back of strength in the US dollar. They rose slightly overnight after that US dollar sort of eased. But as Markus mentioned, I mean, it's sort of been trading within this range. Do you expect that to continue in 2017?
To you too, Leanne. Look, we certainly think when you have a look at the oil prices that, yes, they will be higher through 2017. We've got a range for WTI of only $65 to $75 by year close. So we're not shooting the eyes out of the oil price. We do think that with OPEC now supposedly implementing the nearly, 1.8 million cut in oil production, that we will see that obviously help the market. But of course, compliance is going to be the big issue here, and that's where the market will be very closely watching what's happening. It'll take a few weeks before we know that we know that we've seen those cuts flow through. So until then, we think that the oil price could be volatile, perhaps a little more weaker to the downside. But of course, a stronger US base is really keeping the oil price from completely collapsing.
That was actually going to lead to my next question around the US dollar, whether you think that strength will in fact continue, or do you think this rally is maybe starting to come to a bit of an end?
Look, certainly if you have a look at the US dollar, if you compare it to all its major peers, they're all basically in a mess. So you'd have to suggest that the strength that we have seen in the US dollar will likely continue through 2017. Probably not at the same velocity, but we certainly think it will be stronger. And that will be reinforced by the fact that perhaps through 2017 we will see the Fed continue to raise US interest rates. When you compare US interest rates to its major peers, you know, it's going to be considered as a high yield currency, and really that's going to just keep that US dollar going higher. Unfortunately, if that's the case, that's going to act as a headwind for commodities through 2017. Hence, you can't really say that we're going to see, we believe, a really strong rally in commodities, but there will be one.
All right, Markus, just back to you. We were taking a look at the energy complex there with a couple of those stocks, Woodside, Santos, Oil Search, all moving positively there today. Of course, Santos looking to really clear things up, you know, with that capital raising. What is your thought? I mean, is there some opportunities being presented across those oil-related stocks? Are they starting to look appealing, in your opinion?
Oh, very much. I mean, we doubled up our holding, in particular in Santos. I mean, if you really look at something like your Royal Dutch and, I mean, all your US oil stocks, your Exxons and all that, they're way ahead of our oil stocks. And that's in light of a strong US dollar. You'd think they'd be lagging, if anything. But the Trump factor really must have lifted them even further. So our oil stocks here, to me, are strongly undervalued in relation to its peers, internationally speaking. I mean, the Aussie dollar is around 72.80. I mean, really, I really think on our position on the likes of Santos, we still have a $6 to $6.50 target over the next 3 to 4 months. We're very bullish on that. Woodside still is heading towards $40 in our view, and how long it takes. I mean, Woodside really is a laggard in a big way, and we do believe that could well change very, very soon.
Markus, it's Adam here from Shaw and Partners. Happy New Year.
Hi, Adam. Happy New Year to you.
Thank you, thank you. A lot of the miners are going to come out sort of do their production results sort of in a week or sort of next week. They'll start to do that. And then ongoing from that, they're going to be doing their half-yearlies probably sort of start of February as well. Obviously, this year compared to last year, you know, this time, I think the mood is very, very different. How do you sort of see those numbers, and especially the revenue numbers? And I don't know if you look at the revenue numbers, but for something like a BHP or even a Rio, those numbers are looking to be quite good. Don't you agree?
Very much, Adam, but I think it's really probably as good as it gets. Right. I mean, if you look at their core commodities, such as coal, that might be well supported to some degree by oil and natural gas recovering. But if you look at iron ore, the backwardation now on January 17 to January 18 is at $20 a tonne. I mean, there's any backwardation like that in any other market than an over-the-counter market like iron ore, you'd be going short like with just about every dollar you've got on your body. I mean, really, to me, if you look at technicals, if you look at the Fortescue, I think, to me, the story on iron ore is as good as it gets. And so, yes, I do believe the figure that they're going to show are going to look really, really fantastic. And I think that's more or less built into the price, give and take. I really believe other commodity sectors, as you mentioned, I think the gold sector, in my view, had its 6 months correction and a totally different cycle than your industrial commodities on the iron ore side, for example. So I really think people should look at taking profits in the likes of Fortescue and even BHP. We really think they had a tremendous run, and it's probably as good as it gets within a month or two here or there.
David, a thought from you. Do you agree could be as good as it gets, and we could see some upcoming price weakness in iron ore?
Look, certainly we're not expecting the iron ore price to again move on a higher level over 2017. We've only got about a $10 upside for 2017 year end. So yes, we're thinking modest. But look, the reports that we're going to see for the half years and full years to December are going to be very good. However, if you have a look, if we get through to June and the half year and full years in June, and we've seen commodity prices, in fact, perhaps rising still through January, June, or at least stable, the reports for the full year and half years to June are absolutely going to be fabulous. You know, much better than we'll see in December, and certainly much better than we saw for June 2015. Yes, that's probably built into the price somewhat, but we think when the market does start to see some of these results, they're going to get surprised on the upside, and there's more to come, we think, in those big resource stocks.
All right, let's move on, Markus, to some of the precious metals, gold, silver, platinum. Now, we are watching those gold stocks in this session doing very well. They're really leading the pack again there. Do you think this sort of 6-month price correction is showing some strong signs of finalising? And then just on that, I mean, do you think some of those gold stocks are looking pretty appealing?
Well, as we know, particularly gold is a great example. The stocks tend to lead the underlying commodity, especially from a technical aspect, but also in pure price movement. If you look at Barrick Gold over in North America and the likes of Gold Corp, I mean, they really had a healthy correction, and there's a lot of solid support. It's now also seen here. I mean, we had really the whole broad sector is showing signs to us of this correction to be over from here onwards. It's a bit early to say. Again, as with Santos, we actually doubled up on our gold stocks as well as on our silver holding the last couple of days. So that does give you an idea of where we think things are heading. It might just be not just racing away as of yet. It might just base out and advance in a moderate way for the price-wise for the next month or two, while the stock market has set the stage. But I think I've heard mention the US dollar before. before, and I looked at that over the last 2 weeks and a bit of a study, and I mean, one thing you've got to remember, the US dollar is in an 8-year bull market. When it had its biggest bull market since the 80s in the 90s, based on a real reason to rally, which was the tech boom of the 90s, the US dollar index went to 120. That was the top, more or less. We're currently at 102. Previous tops have been around 110. And people have to keep in mind the US dollar index is an index on a basket of currencies against the US dollar. So it's not just the yen and the euro, while they're a strong component. There's your Mexican peso, your Brazilian real, and whatever else is in there. So I really believe the US dollar rally will probably have a few more legs to it, as mentioned earlier on the show. However, we target 108 to 110 as a major top of this overall probably by then 8.5-year bull run. Now, what does that mean for the likes of gold and silver? Well, I think the fact that gold and silver are holding relatively well in light of the recent rally in the US dollar does show us there is an underlying demand. And we've also had Bitcoin mentioned just earlier, and of course that's the nouveau vogue type diversified investment to your conventional type currencies, and will definitely have as its base. But we've got to remember, in human history, gold always has been an absolute safe haven. Par excellence, there's been no other safe haven like that ever in history of humankind. Now, that's in people's minds. Hence, I wouldn't be surprised to see gold and silver broadly starting to see some serious safe haven buying from investors who start to take profits in this raging vertical bull market in the stocks.
Particularly with all that uncertainty around Trump's inauguration and those policies that will be enacted. And of course, asset markets really around the globe looking pretty stretched at the moment. If that is your view as well, David, I'll just move across to you. If the market is looking a bit toppy at this stage, do you think we will continue to see that underlying demand there for gold?
Look, certainly if you have a look, we expect inflation globally will be more of a problem towards the end of this year than it has been for many years. So that's going to certainly kick physical assets along, including gold. We certainly think currency, although the US dollar is likely to still tick higher, we think the dollar index will go higher than 110, probably looking at 14 or something like that until it peaks out. So that's going to be a problem. But overall, we think that the uncertainty, as you've suggested, through 2017, the inflationary spectre rising, that's going to, we believe, push gold along. Again, we're not looking for $2,000 gold price, but just a nice upward momentum through 2017, which is really what all the gold miners want. And where we're looking for now is we're not really looking for US gold producers. We're actually looking for domestic currency producers in South Africa, here in Australia, where we've seen the dollar actually rise significantly against those local currencies. Those producers are really going to get a kick along from the currency as well as the higher gold price, and that's where there's going to be good leverage to be had in the gold sector.
All right, fantastic. We're going to wrap it up there. It's been wonderful having both of you on the program. David Lennox from Fat Profits and Markus Helsing from Alpha Broking. A big, big thank you to both of you. Thank you.
Thank you.